If you have an income that fluctuates every month, let's look at how you can do velocity banking with your credit cards. Their expenses total about $6,300 per month. Their weekly income varies from $1,100 to $1,800 per week. To do velocity banking with their credit cards, they're going to need an income of about $1,578 just to break even. So you can see here we have their home expenses, their credit cards, their miscellaneous spending, their loans, and their medical. All the payments are listed. Anything over here that has a green star next to it is something that has to be paid directly out of their bank account. It cannot be paid with a credit card. The car insurance probably could be put on a credit card, but maybe they don't want to, so they considered it a cash expense. You can do this on paper like this, or some people prefer to do it in a planner. It's sometimes easier to see where your statement dates are and which bills you'll put back on each card if you're looking at a planner. So you can see on the planner, we have the cash expenses all listed in red. We have their credit cards listed in pink. All the bills that can be put back on the credit card listed in the dark blue. And then over here on the side, we have their miscellaneous spending, which is about $1,050 per month. This is their food, gas, and any additional purchases that they make throughout the month. Since they get paid weekly, let's divide this up to see how much they can spend per week on food, gas, and miscellaneous spending. So we'll take the $1,050 and divide it by 4 weeks. So it's about $263 per week. So $263 per week. Now we need to keep that in mind for later when we decide which cards we're going to put that spending on. We also have their paydays listed here. Again, they get paid weekly, and we're hoping that they make $1,578 each week just to break even. If they can make more, their debts will go down faster. We also circled all of their credit card statement dates. We put an initial next to it so we know which card is closing on each day. So we can see from the 6th to the 19th, we don't have any cards closing between this time. So any bills that are due after the 6th, before the 19th, will have to be put on this Southwest credit card that is due right here on the 4th. Okay, so let's start with the paycheck that they get on the 5th. And let's assume that it's going to be that $1,578 that we need it to be. The first thing that we do is go through and look at any cash expenses that are due between this check and the next check. Those have to come out first. The cash expenses total $410. This leaves $1,168 that they can pay to the credit cards. Now, we don't have any credit cards due during this pay period, but we also have a low amount of cash expenses. So we have money left over that we can start paying these other credit cards here. We can also pay the Southwest card again. Hopefully they already made the minimum payment before the paycheck on the 5th, but the statement doesn't close until the 6th. So we can make another payment on the 5th to have that reflect on the 6th. Then we go through and see which bills we're going to put back on that Southwest card. So anything that's due before the 19th, so the AT&T, the lights, and the water. Let's pay $900 to it. That's also going to include the $263 that we need to spend per week on these things over here. So if we pay $900, these 3 bills here alone total $600. So $600 is coming back out for that. They're probably going to charge about $60 for interest, and we need to put that $263 for the other spending back on the card. So if we pay $900 minus the $600, minus the $60 for interest, minus the $263 for the spending. That puts us at negative $23. So maybe for the miscellaneous spending, we do $240 instead of $263. But now we've paid the card balance down $900 on top of whatever they already paid for their minimum payment, and the balance on that card will report $900 lower, even though it's going to go right back up. But again, this was just the break-even number. So if we want the balances to go down more, this number would have to go up. Now let's look at the paycheck on the 12th. Again, let's hope it's $1,578 at least. We go through and look at the cash expenses that we have here. Those cash expenses total $907. This leaves $671 that we can pay to the credit cards during that week. Now let's look at what credit cards we have to pay. So it's the 12th that we're getting paid. We need to pay the American Eagle, the Credit One, and the Disney card. So American Eagle, Credit One, and Disney. Now over here, remember we had $1,168 left. We only paid $900 to the Southwest card. So we have $268 that also is going to transfer over here. So let's say we pay $400 to the American Eagle card, $431 to the Credit One card, and $100 to the Disney card, and we are not going to use that card. So that balance should be going down a small amount every month. The Credit One card, we had to pay enough to put the Starlink bill back on it, and the American Eagle card, hopefully we can use that for the miscellaneous spending, and that balance might go down a small amount as well. Remember, they didn't have very many expenses that could go back on a credit card, only these couple here. We paid these 3 bills with the Southwest card, we paid this one with the Credit One card, and then we'll pay the medical bill with the Care credit card. So we don't need to use the Disney. If for some reason we can't put the spending back on the American Eagle card, we would have to pay more to the Credit One card in order to use that for those. So let's see, we had the $671 plus the $268 from the paycheck before. So we had $939. We paid $400 minus $431 minus $100. So we would have $8 left over. You could pay that to any of those 3 cards. So that there looks good. Now let's look at the paycheck on the 19th. Again, hopefully we get $1,578. Now from the 19th to the 26th, we only have one cash expense. It's $36, which would leave $1,542 to pay the other credit cards. Now during this paycheck, we have the Sam's card, the Care card, and then we're also going to probably pay early the Southwest card. This last paycheck of the month is very cash expense heavy with all of these expenses here. So we probably won't be able to use that to pay any of the cards. So if we get ahead with the Southwest payment on the 3rd paycheck of the month, that will already be taken care of. Then they'll get paid again before the Southwest card closes, that they can add more of a payment if they need to. So we're on the paycheck of the 19th. We had $36 in cash expenses, and we have to pay the Sam's, the Care, and the Southwest. Now, before we do that, remember I said it was cash heavy on the 26th. This paycheck is not enough to pay for all of these expenses that happen between then and the next paycheck. So let's look at that paycheck at the same time that we look at this paycheck. So we have $1,578. The cash expenses during this paycheck, again, are high, $2,540. So this 4th paycheck is not going to cover all that. So we're going to have to take some from this paycheck to make sure everything here is paid. So we are negative $962. So we're going to take immediately $962 out of this check here and put it over here to pay all of those cash expenses. So now we really only have $580 that we can pay to these cards here. So let's say the Sam's, we pay $300. That's going to cover the food, gas, miscellaneous spending, hopefully on that card there. The Care credit, if we pay $140, we should be able to put the medical bill of $100 back on that card. And then again, we're going to get ahead on the Southwest card. So let's say we pay another $140 to it. So we've spent the entire $580. But now we've accounted for all of these bills here that can go back on the credit cards. And remember, we have the food, gas, miscellaneous that we need to spend every week. So we can do that on this card here. We can do it on this card here and these 2 cards here. Because remember, with the Credit One, we only needed to put $120 in bills back on that card. So there should be enough within one of those weeks to pay for these expenses here. Now again, a lot of these balances we're going to pay down and then we're going to spend right back up because we don't have a lot of extra money to pay to the cards. If we did have extra money to pay to the cards, let's look at what that might look like. Let's use the Southwest card as an example. So let's say we had an extra $400 that we could pay to that card. The balance on that Southwest card was currently at $2,730. So let's say we pay $1,300 to the card. Now the balance goes down to $1,430. We wait for the statement to close on the 6th before we put any spending back on the Southwest card. So we were at $2,730. The balance on the card is $5,000. We were at 55% utilization on that card. After we made this payment here, $1,430 divided by 5,000, 29%. So we would have gone from 55% down to 29% on that card, even though we're still going to put bills back on there. And again, this was if we had an extra $400 during this paycheck. Then we would put the $60 for interest, the $600 for the 3 bills, and the $263 for the food, gas, and spending. So the balance $1,430 plus 60 plus 600 plus 263. So the balance would end at $2,353. So if you have extra, this is what it looks like. Once you put these bills and spending that you plan to put back on the card, you do not spend anything else after that. This is one of the hardest parts about budgeting. No matter how you're paying off debt, you have to stick to what you have in your budget. If you're not able to stick to what you have in your budget, you need to take another look at your budget to see if you're budgeting properly. But in this case, we went from $2,730 down to $2,353, and then we would not spend anything else on the card. So that's how the balances go down, but we have to have extra in order to do that. So hopefully they can find an extra couple $100s per week that they can start paying to some of these cards to see those balances go down faster. They will go down a small amount right now. Remember, we weren't going to use the Disney card and we did pay over the minimum payment. But we would like them to be going down by hundreds of dollars every month. So if you're using a planner for Velocity Banking, this is how it's going to look. Look at your paycheck, find any cash expenses, pay those first. Then you should be able to pay everything else to your credit cards. Then decide which credit cards you're going to use for each one of your bills that can go back on a card. Make sure you account for interest in the payments, which in this case we did. And remember, sometimes if you have a week that's heavy in cash expenses, you might have to pull from a previous week to make sure you have enough to cover those bills. Hopefully this breakdown was helpful, and if you have any questions about Velocity Banking, credit cards, credit scores, debt, or anything else, let me know.